Dr. Rodriguez, let's talk about where we are in the China negotiations right now. We heard from President Xi just overnight, in which he gave a speech supposedly about One Belt, One Road, but a lot of people thought it was really talking to President Trump.
I agree.
Saying we'll abide by our agreements and suggesting maybe subsidies are on the table, maybe intellectual property is on the table, maybe foreign investments on the table. Is that a major step forward for the Chinese just to recognize they may have to address those issues?
I thought it was a great step for the Chinese, and I think it was a clear signal to President Trump and the administration. It's a warming sign, and that's very positive. I think the Chinese know that to go further in trade with any nation, not just the United States, they'll have to be open to talking about these issues, about addressing international property issues head-on. State subsidies have always been a big deal, and even bringing to the table questions about currency manipulation. It's all been talked about before. I think we've all had that discussion, but this was a warm welcome that says, let's keep talking. We want to see something happen. I think the challenge is they can afford to be really patient. There's no great sense of urgency, and trade negotiations in particular are stubbornly slow. And so I expect that this is a good sign, but it's not necessarily a sign that something is truly imminent. It might be, but so far, it's just it was a good positive step forward for the two nations.
Well, as you say, a step forward. We have a long way to go, and
right.
I'm sure it won't be a straight path. At the same time, whether one agrees with President Trump's approach or not, does he deserve credit? And this is not even a political question. Does he deserve credit for having gotten their attention? He came out actually just overnight and saying, in responding to Joe Biden's running for president, he's just not tough enough to deal with the Chinese. Now, whether Vice President Biden is or not, did it take somebody as forceful, some would say belligerent, as President Trump to really get their attention?
I don't think so. I think the Chinese are very sensible about making their deals, and they understand that there's a lot at stake. When you have essentially the largest customer in the world in the U.S. and the largest producer in the world in China, naturally they need each other. There's a mutual dependence, and so I think the Chinese would have come to the table. Nevertheless, you always have to play your cards very smartly. You always have to be somewhat aggressive and willing to walk away, and for that, a good trade negotiator should always follow those steps. But I don't think they had to be quite that tough.
It's, I think, far from clear that this will get resolved in the sense that we put it away and it's gone.
Right.
How much of what we're seeing in the tension between the United States and China right now is inherent in a number two power rapidly approaching taking over a number one power in the world?
I think it's probably a dynamic that we've been witnessing for over a decade and will witness for at least a decade more. It's going to become more tense, not less tense, because the stakes are going to be more the same. Our countries are more comparable year by year, and I think we know that China's ambition is not just to merely be the manufacturing powerhouse of the world, which they have been for so long, but to assume a rightful position in their minds, being the producer of intellectual property, being the producer of the world's R&D, being really the center of global finance and other things that the U.S. still holds, and I think will hold for quite a while. But that's going to ramp up the tension because in some sense, it gets more to the heart of the U.S. strategy for its economy now than before, and I think that's critical. So
let's turn to a different trade issue, the successor to NAFTA, the USMCA, which is still pending in Congress, not ratified, not clear when it will get ratified. Many economists say that, in fact, NAFTA has been good for the U.S. economy, not just good for Mexico's or Canadian's economy, but good for the United States economy. Where did the message get lost to the American people? Because if you poll a lot of American people, they don't seem to believe that.
I think in part it came from probably the origin. And we all remember Ross Perot talking about the giant sucking sound from the South. And you just can't get around equating NAFTA with job loss or in that general period of disinvestment in the center of the U.S. economy, disinvestment in manufacturing, and a migration of the U.S. to higher value-added trade in goods and services. And so that job loss and that increased economic anxiety, that growing inequality was all coupled with NAFTA. So that's 25 years. I think it's been unquestionably good for the U.S. economy. It's created quite a few jobs, integrated the economy, stabilized Mexico in a way that was good for the U.S., not just for them. But I think that's in part where the message got lost. If at the end of the day Americans weren't feeling like they were living better and better, there was a very nice scapegoat in NAFTA, and a lot of folks were willing to offer it up that way.
Let's turn to something else that you've done research on with a team, and that is corruption, if I can put it that way. As U.S. companies go around the world, by the way, as European companies go around the world as well, there is a lot of corruption, at least solicited.
Absolutely.
This is not a new problem. We have a Foreign Corrupt Practices Act because of that.
That's right.
But what did you find about the effect on the companies who engage in this behavior?
Well, companies always face big challenges. They are always confronted with the challenge of corruption, and there is always, shall we say, a market for influence in any country that you go into. Sometimes it's very formalized, sometimes it's informal. Middle managers, under a lot of pressure, often succumb to the pressure of saying, I'm either going to win locally, I'm either going to keep the jobs that I came here to create, or I'm going to lose because I'm held to the FCPA. So what they find is that managers under too much pressure, our research showed, really succumb much more quickly, and they need to have broad objectives and the license to fail. And if they don't have the license to fail, that they're going to succumb. They're going to act in the best interest in their mind of shareholders and of the people that they work for day to day. And that's a significant problem that all companies face. And it's not really going away. It's an evergreen problem, and it probably will remain so for a while.
Finally, let's turn to the question of diversity, which is an issue for the country. It's also an issue for financial institutions, for Wall Street, for corporations today. Something that you've been identified with, not least because, as I understand, you're the first Latino dean at Rice University, which is a major accomplishment. Congratulations. How do you see where we are right now, and specifically with respect to financial markets, financial institutions, banks, corporations, C-suites, with diversity?
Well, at the entry level, we've made a lot of progress, and you no longer quite see the stark disparities at entry level, and that's across underrepresented minorities and not. That's across women, that's across gender, sexuality. But what really happens is as you go higher and higher, the ranks look less and less diverse, and particularly when you get to boards, they're less and less diverse. And in some sense, the devil really is in the details. So for example, if you looked at the treatment of women in organizations, you'll find much more equity in pay, you'll find much more equity at entry levels, but the details mean that women are sort of ferreted out of roles, or the incentives are just a little bit hard to see, but they don't make it into the higher and higher responsibility levels. And so when a hiring board looks for a new CEO, they look and they think, nobody has enough experience except for this same group of people. There aren't many women, there aren't many underrepresented minorities, and that's the problem. And it's those details that really tend to matter a lot.
What about the pipeline? If we went down to your school, your business school, and I took a look at the demographic profile, what does it look like today?
So today you're going to see about 37% of the profile of being women in the school. You're going to see about 20% underrepresented minorities, that's African Americans and Latinos, and the rest will be white American males, or they're going to be foreign students. I think on the women's side, that's way too low. We should be closer to 50-50. It's a notoriously difficult number to move. But for a lot of reasons, I think women look at the job options and they're less attracted to some business fields than men are, and we've got to change that.
But what about underrepresented minorities? Because that's still below the national profile.
It is, and for a really highly competitive school, what happens is you tend to lose people in the middle, particularly if they look at the cost of schooling and they think, I don't know that that ROI is going to be there for you. So we have to meet them more than halfway, and we do. We are the most generous school, I think, in our peer set when it comes to scholarshiping, because we don't want to have people make that choice. But then there's also that problem that goes back to the one you mentioned earlier. If I don't see someone like myself in the top organization succeeding, then I don't even imagine myself into that role, and therefore I don't begin on the path. So you have to have both the role models that succeed at the top to feed the pipeline, and we don't quite have that yet. We've made a lot of progress, but there's still progress to be made.